Afternoon, gents and ladies. Back with something for you. Pretty good one, I believe. It's Annaly. It's a real estate investment trust. Um, and I'm going to tell you why. Because it's a high dividend payer. I think the current interest or the APY, 10.05%. Not bad, eh? So above this low. Yep. Okay. But before I get into this, because I've got a little story I'd like to share as well. Just want to give a thank you to everyone who's followed me, all 46 of you. I've only been on this for a couple of weeks, but I put out a bunch of ideas, 101, and lovely 174 likes, and reputation 114. I'm in the green. I don't know what that means, but I'm in the green. So thank you to all you guys and gals. If there are any gals following me, I doubt it. Right, traders, mainly men. Let's have a look. Sem, Matthias Wingate, Clyde, Saver, Sixon, TG, Saf, Fargates, SD 2130, Suha Mahada, DHD 269, Grateful Breath, Aeon 93, Wally 20, Jemke, I was talking to him earlier, Rana G4U, Mark Wob, Karen Versiput, Technologist 4385, VBG, Hallelujah, can't really say that probably, but Hallelujah. Jorgen Marto Anderson, Twisted 708, Bena Midi, oh my god, 13751397. Hopefully that is not your private key number or something. Giles Morris, General Josh, Shadam 1T, Deb 101, Mitch Turn, TR7Z, Lich T8, Unib, Jamil, Shri Ganesh 55, Raid Abdel Kader. You guys need to come up with easy names to say. Archim Crypto, Hoddle, Loddle. I get what you mean, but Hoddle and Hoddle backwards. Desi Pride 031, Janu Clark, Tinga 3939, Advance 49, Weird Nax 1, Gordax Underdash, Balab Balois, Dorsa 009, Bobby 921, 0 wins, Capito Wow, Arjan and Tony Younes and Edison Cos. I think Edison Cos I know from the Hex community, so I think that's the only one. Hexkins, where are you? Okay, but yeah, thank you guys, and I've only interacted with a few guys, about 2 or 3, but some people messaged me and asked me to chart stuff, and I did it. And so, yeah, who am I following? I just started following Jemke and Michael Wang, so I don't know who to follow. So maybe comment who should I be following, right? That'd be nice. That'd be nice for you guys to do something for me. Give me your top 3 on TradingView to follow. Okay, enough for the shout outs. Annaly, why do I like it? Well, it's a real estate investment trust. And I'll go back to this story because I'm in Hex and fairly active in the community. Someone who was doing a YouTube stream, he was an Australian guy, and he was sharing a story about his personal friends, a couple who were trying to buy a house. So they spent the best part of a decade putting together 187,000 Australian dollars for a down payment, and they thought that would be enough. Whatever the down payment requirement was, 15%, whatever. And so they make an offer on a house, and the bank was like, "You haven't got enough for a down payment." Oh, it's such a sad story. I think they're in Melbourne, right? And so they spent 10 years slaving away, collecting all this cash to buy a house to secure their financial future, right? Essentially, that's like most people, right? And so they've been holding this cash, which has been losing purchasing power right? Because they thought they had enough, but when it came time to buy, it wasn't enough because like Ray Dalio says, cash is trash. So inflation's eating at it every year, and depending on the stats you believe, even if it's like 3% a year, right? So they may say it's 2.2, but it's higher than that, right? In reality, so say 3% a year. Imagine you start off the decade with 100,000. 100,000 minus 3% a year compounded. You basically lost half your money after 10 years. Half your money gone. And I was just doing a quick math on my mum, who bought a house in 1990 for basically 115, 120,000 pounds, right? And she sold it in 2017 for just under 600,000. Maybe it's like 575, something like that. I'm not too sure the exact numbers, but it's in that ballpark region. And so she's quite proud of herself. She thinks she's 5x the money, right? But in reality, she's actually kind of like stood still, because now when she sells a house, she's got to buy another house, a smaller house, for like 450, right? And now she's got a problem of what to do with the cash. She's got money in the bank, which is fine, is security, but that's been eaten away by inflation again. And so when you buy a property and it's your main residence, you got to pay taxes on that. In America, the taxes are, depending on the state, astronomical. You go to New Jersey and you're paying $6,000 a year on a regular 3-bedroom family house, right? So the cost to hold that house, the asset, is quite high, and you got upkeep, and you got to do yard work, and you got to pay when the boiler claps out or the air conditioner unit claps out. So you got to have home insurance, etc., etc. So the cost to hold this asset, which you think is going up, is actually being it's actually not really going up that much, because I can prove it to you. So that 5x, imagine if it cost, during the course of that 27 years to hold it, £100,000. You've got to do home improvements, you've got to buy furniture, repairs, etc., all taxes and etc., right? So maybe that 570 is actually like 450. Would you have not been better off just plugging away in a SPY? 1990. So the good thing about housing, it's leveraged, right? So imagine if she bought it for 120, 125, whatever, and she put down 20% down payment, so £25,000. Would she have been better off just buying the SPY? Let's have a look. So let's do SPX. I think you know where it's heading, right? 1880, 1990. Here we go. 351. And we're at 4170. So it's done a 12x. It's done a 12x, I think. Yeah. 12x times 12x times 25. That's at 300,000, right? 300,000. And imagine if you're getting paid dividends, because I don't think the SPY will give you dividends. Maybe it does. Let's have a quick look on the daily, because it's they do give you dividends. Now this is getting interesting. You've got the price performance of the US stocks, and you're getting paid interest. Okay, let's have a look. So this is going to trounce owning a house, right? Absolutely going to trounce it. uh, I believe. So let's start here. 21 cents on a $44 share price. You're looking at about 2.5% APY dividend. It's not too bad. Not too bad at all. 2.5% income on an asset that's gone up 12x. Well, okay, let's get a calculator. No, I won't do a calculator. But are you getting the kind of a gist of the idea? So she would have been better off just holding stocks, right? Or finding a good alternative to housing, because that actually holding a house is damn expensive, and it's actually not really going up that much, right? Because it hasn't really got that earnings power of a good, well-run company. How can it? Because a good, well-financed company can grow easier, it can scale easier than, than your house you own, right? So basically, a house just becomes a storeholder value, just somewhere to lock up your money. But it does have the leverage play, because you know basically doing a 5x leverage, right? If you do 20% down, but you can do that on stocks as well, because holding the stocks for you for a few years, now you've got capital built up, and you could even go on slight margin, maybe like 1.3x or something, just to give it a little bit extra juice. If it doesn't even need it, but you could. And you've got an asset that you can draw on, right? If you know around here is the bubblicious kind of period, you can, I believe, get a line of credit against your stocks you own. So essentially, you could live off your asset. That's what I'm trying to say. Because you could do the same thing with your house, right? If you buy a house for 100,000, it goes up to 300,000. You've got 200 grand of equity, and you can go to the bank and say, "Hey, give me a HELOC loan, right? Home equity line of credit." Same thing with an asset. If you've got a relationship with your broker, and you got a share that you've held for ages or a few years, and you've done well, you can get credit off it. So you can actually live off your stocks. On to my little gem I've found. Annalie. Annalie. A-L-Y. So, the reason why this is good, I think the yield curve is pretty flat-ish right now, right? Pretty flat. But it looks like yields are rising. And so the yield curve can do three things. It can be flat, which means like short-term rates are similar to long-term rates. It can invert, which means short-term rates are higher than long-term rates, which basically tips the time value of money on its head. So if you lock up your money or borrow money for long term, it's supposed to cost you more, and it's supposed to pay you more than a 3-month lockup or loan, right? Longer pays better, always, right? But in generally, there should be a curve from low time frame to high time frame. The longer you go out, the more interest that money has, right? It costs more to borrow, and it will pay you more, essentially. So we're kind of at a flattened point in the yield curve, but it looks like it's steepening, rising. Rates are going up. You're going to hear this in a lot of economic chat. Rates are going up. So what happens to annually? So this is interesting. If rates go up, annually can buy more mortgage-backed securities because it's a REIT, right? So it's a vehicle for real estate investment, right? You don't have to do the work. You're paying this management company to go out and search good investments, right? Whether it's commercial or a block of apartments, and they're doing the work. They're finding the deals, they're getting the financing, and you can just buy it, right? So back to that Australian couple, they wasted most of this year holding cash, right? Um, Imagine if they just like picked up annually, right? Every month, $100, $200, $500, whatever they were saving every month, and so you dollar cost averaging all the way through, even you picking up this, right? And you're getting paid 10%. So maybe your average cost. So say we started 2010. So your average cost is around here, right? But you're getting paid 10% a year as well. So instead of that 187,000, it could be worth, I don't know, 250, 265. And minus this COVID crash, give it a couple more years. Ooh, we're talking some big numbers here. So you can hold property. That's what I'm trying to get to. You can hold property through a vehicle like this. If you're young and you're starting out your career and it's like, oh man, it's going to take me years to save up. Well, maybe you can just get your property exposure through a REIT. And so back to the interest rate going up. When that expands, now Annaly can go out and purchase like either investments, like more skyscrapers or little mini towers or apartments, or mortgage-backed securities with that higher yield, right? So it's basically going to its margin of interest is going to increase. So it's going to receive more interest, and its income's going to go up, and it's going to pay you more dividends because of that. When its earnings go up, its dividends going to go up. Okay, and they've got access to leverage. They've got access to cheap credit. Banks are stuffed with liquidity, so a company like Annaly can easily tap it, right? That's what the whole Fed FOMO, POMO, whatever it was prior to COVID was about. There was lack of liquidity. So that's been solved, right? There's a wall of dollars out there, right? And so Annaly could be good. So here's some key facts. It's got a market cap of 12.125 billion. So it's not it's a good size, right? It's got room to grow. And currently, it's going to pay 10.05 APY. And I think it is a quarterly or monthly dividend payout. I'm not too sure. Oh, this could be a monthly one. Is it? April, Jan, no, it's quarterly. So it's paying, I think, like 90 cents is forward projection for this coming year. So this is 22 times 4, 80. So there could be a little bump up coming soon, maybe 25. And then what was it paying out previously? Back here. 65. Ooh, see? When business was good, this was like post 2008. I guess it was paying out way more. So that's why the price action has been underperforming, right? Yeah. So if you start seeing Annaly start increasing its dividend, then business is good. So keep a lookout for its dividend growth. Its dividend growth will drive up the share price even more, and its earnings will go up because, like I said, the yield curve is steepening, so it's going to be able to charge more on its properties, right? It owns. So I hope this was good for you because, 10% APY on a growth potential. Yeah, this could be a good one for you guys. All right. Thank you guys, and appreciate to all the followers, all 46 of you. Take care. Bye now.